Hi, this is John Lansing with your chart of the day, and I'm recapping the bull flag breakout that I had updated right here on this chart of the day update. It was approximately, it would be 1, 2, 3, 4, 5, 6, 7 trading days ago, and it did break out of a bull flag and rallied up and now appears to be forming a bullish pennant. Now, a couple key things with these types of short-term patterns. Number one, these are not necessarily, as I said in the last update, buy and hold. We're not talking about, this is a high flying, falutin', flying stock that we're not talking about investing here. We're talking about short-term chart patterns for those that are more active traders. Now, on the last update, when I was talking about the bull flag having 3 to 5 day pullbacks, that you could see that how the light volume was here. Then on this particular day, right here, which I pointed out, it was the first time that it had taken out the highs of the previous day, but it did so on this type of volume. Well, needless to say, over the course of the next 3 to 4 days, it had rallied 20 points. Now, it's been consolidating in what we would call a bullish pennant, which is like a mini symmetrical triangle. And these typically last about also 3 to 5 days. So this is 1, 2, 3. This is an inside day from the prior day. So generally how these work is if we're able to take out the highs of yesterday, which were 164.99, then we would be breaking out of this bullish pennant. Now, unlike the bull flag where you can here, let me put it this way. Unlike a large symmetrical triangle, let's say something of this nature, where patterns measure the distance of where a stock would move, let's say that this symmetrical triangle here has a 20-point range. You can generally figure out a price target of where the stock will go because, it would, from the breakout area, it would move up 20 points, almost like the vortex, let's say, of the particular geometrical shape. In this particular case, it's a buy if it takes out 164.99, but your stop is automatically at the low of the prior day, which would be, because it would be a pattern failure, of 159.49. Okay, so a stop at 159.49. So sorry for not being able to write very good on the chart, but so we're looking for a possible bullish pennant breakout if it can take out this price, with a target, being that it's at all-time highs, target is as high as the stock will take it, and a stop of 159.49 if it takes out the highs and then reverses. Now, you should be forewarned that the spiders, if for those that don't, let's say, follow futures or the S&P 500 in general, has very strong resistance at 115, and we've hit it the past couple days in a row, and every time we hit it, you start seeing stocks fall back. There's a group of, let's say, our front runner groups, such as Apple, that was down yesterday, Baidu, that was down yesterday, Netflix, which was down yesterday. Let's just say your front runner stocks, because we're hitting up against that resistance. If we're able to break through that and get, some sort of, if these runners are able to buck the trend, then you could possibly be looking at another run where you could get $5, $10, maybe even $15 over the course of the next couple days. Again, this is just for short-term traders, not buy and hold. I'll also point out that if you were to look at some of the indicators and oscillators, let's say we're looking at the MACD right here, no bearish divergence. Every time the stock has made higher highs, so has the indicators and oscillators. And if we're going to look at overbought levels, we're not even quite yet to overbought. It doesn't mean that if you were to look on the weekly, it's probably super overbought. But sometimes that's when stocks can get their biggest up moves. This has been John Lansing, editor of Trending 123, with your chart of the day.